Welcome to the first ever episode of Read the Bull, the only podcast dedicated to finance and investing books. I'm your host, Stefan. Since this is our first episode, I want to tell our listeners what they can expect. As I said, this is a podcast about finance and investing books, where authors can talk about books they've written, the process, and we'll get into how they got published, a sort of how it got made book version. And the one thing I found is a lot of people want to write books. Writing is hard enough, but even if you have the chops to write a book and get it done, people don't know how to get it published. So I want to give a little clarity and understanding of how it's done and talk to the people who've done it. That's why I'm very excited for my first guest. I was thrilled when he agreed to do this interview, given that there were no episodes. This was the first one, and I reached out, and he said he was honored to do it. I think he's one of the best writers in finance out there, but he's done more than that. He's been a trader. He has a hugely successful investing newsletter. He's hosted a radio show. He's done his own podcast. He's a Bloomberg columnist, and of course, he's an author. He's written 2 books, Street Freak and All the Evil of This World. And he's also a self-taught DJ. You just heard his track. So I think he's a modern day Renaissance man. So I'm thrilled to have Jared Dillian with me today. Welcome. Did I forget anything?
Hey, I have 7 cats.
We can't forget the cats. He does. He has 7 cats and does a lot of great charity work with the cats as well. So I'm sorry to forget that's really the most important thing.
Yeah.
So, okay, great. So we have so much to cover. Let's get into it. I want to have a discussion about your first book, Street Freak, which was published right around September 2011, right?
September 15th, 2011.
Okay, you got the date. It was supposed to coincide with the anniversary of Lehman.
Yeah, there's a whole story behind that.
Okay.
The book was published very quickly. It wasn't exactly a crash, but it was still published very quickly. It was published in about a year.
Okay.
And the publisher, which was Touchstone, wanted the release of the book to coincide with both the anniversary of 9/11 and the Lehman bankruptcy.
Okay.
They thought that would give it extra publicity.
Sure.
Totally backfired. Like, it was disaster.
Yeah.
Because actually what it coincided with was Occupy Wall Street.
Right.
And, I don't know if you remember the publicity tour for this. It's not your fault, not your fault, but it was a disaster.
Yeah.
Because we would go into these interviews and they were hostile. Like, people were like, if you remember what it was like back in 2011, people were angry with Wall Street.
Yep.
So I had these interviewers that were asking me these questions like, why are you such a jerk? And it was like one after another.
Right.
Actually, that was one of the problems with it. It wasn't really a book about Wall Street so much. It's a memoir of my struggle with mental illness while I was working at Lehman Brothers, and that totally got overlooked.
Yeah. So what Jared is referencing is I was the publicist hired to work on his book. And I look back because I forgot that context. I think I probably put it out of my mind. I did find Kevin Roos did a deal book piece, and I was like, oh, this was great.
So do you want to know the story behind that?
Okay. Remind me.
So, I don't think I ever told you this, but I met Kevin Roos, who, by the way, was 22 years old at the time.
Yeah.
Had written a book already. He was this Barracuda reporter.
Yep.
And I met him at the Museum of Finance down on Wall Street. And I go up to him, and he's a short little guy, and he's standing by the Lehman Brothers exhibit, and there's a picture of Dick Fuld.
Okay.
And he says, Dick Fuld just looks like a modern day Wall Street villain.
Yep.
And I said, well, I don't think he's a villain. And he's like, what are you talking about? And I'm like, actually, from my perspective, he grew the firm from where it was in 1994 to 2008. He actually was a very successful CEO, and he got angry with me, and we got into almost a shouting match in the museum. So at the end of this interview, I'm like, I'm toast, like that. And another thing he said was, he's like, so you disagree with my boss, who was Andrew Ross Sorkin, who had just written Too Big to Fail?
Too Big to Fail, right.
And So I thought I was toast.
Yeah.
So at the end of it, I was like, are we cool? And he's like, yeah, we're cool. And then a couple days later, I was doing the publicity tour in Connecticut, and I pulled up to the Mohegan Sun, which is where I was staying in the hotel, and I was checking my BlackBerry like every 5 seconds for the article to load. And I was in the parking lot of the Mohegan Sun, and it loads, and I'm reading it really fast to see if he slimed me.
Yeah.
And it was actually a decent article.
It was.
And then I went into Fuddruckers, and I ate a 1 pound hamburger.
A celebratory hamburger. Yeah, it was a good column. So I guess you put all that aside.
Yeah.
But as you said, and I forgot that context, that you were Occupy Wall Street. There was a lot of anti-Wall Street sentiment, but as you said, the book is not like that. So I think Time has probably done a lot for the book, and
it continues to sell.
Yeah,
it's had a very long life.
Yep.
A lot of books, when they are published, they sell a lot of copies in the first couple months, then they go to zero. And this book didn't sell a lot of copies in the beginning, but it continues to sell 11 years later.
Yeah, well, I'll take a little credit for that. But I've heard it compared to Andy Kessler's Wall Street Meet, Michael Lewis's Liar's Poker, and honestly, I'm not just saying this because you're sitting here, but I think it's on par, maybe better than those. It's got a lot of layers, like you said. It is a book about. Look, it's a book about leading up to the global financial crisis. It's a book. You were at Lehman leading up from 2000 to
2001 to 2008.
Right.
Yeah.
So it's your time there as an ETF trader for most of the time. But it's also a book about New York at that time. I mean, 9/11 and post 9/11 New York, which was very interesting time. And it was a book about your story. It was also a book about mental health.
Yeah.
So it has a lot of layers. But I want to start a little with Lehman, because as I was rereading it, I was like, one, the mental health thing, I think it's more relevant today, given we've just gone through a pandemic. Could a Lehman exist today?
No, I don't think so. The capital requirements are too high. There's too much regulation. It would be pretty much impossible.
Yeah.
The financial sector is much more heavily regulated than it was prior to Dodd-Frank.
Yeah.
Not a lot of regulation in crypto, and we saw a lot of things fail there.
Right.
That comes at a cost. It means the banking system grows more slowly and the economy grows more slowly.
Right.
But you're not going to have a large, complex financial institution that is going to fail and bring the economy into a depression. Like, that's not going to happen.
Right. The risk is just transferred from one part of finance to another, like crypto today. And I did think of that. I felt like a lot of things that you were describing, really there was a parallel with what we're seeing in the crypto space. Yeah.
I mean, the good news is that, the holders of crypto are not systemically important, at least. Yeah. Nothing failed in this crypto bear market that has been systemically important.
Yeah.
So.
There's a lot to get to. I do want to just read the opening, because, they always say, like, great books have a great opening. So this is from the very first chapter. The market has its own intelligence. It has sort of a malignant omniscience that dictates that the market will do whatever fucks over the most people at any given moment in time. Still pretty relevant.
Is that from chapter 1?
That's from chapter 1.
Wow. I haven't looked at it in a long time. Yeah.
This opening paragraph, it's a great first couple lines, a great opening paragraph. You're a sinner in the hands of an angry God, and your positions are going to pay. Like Santa Claus, sort of, except that the market doesn't care who's been naughty or nice. More often than not, naughty wins. Market cares who is the most exposed, who is the most over his skis, and who has taken the most risk at any given moment. And once the market has ascertained the point of maximum pain, it will more violently in that direction, causing the greatest number of people to lose the most money.
Yeah. That's pretty good, actually. That's pretty good.
That's not bad. Yeah, that's a great opening line. I did read the whole thing again, and it was, again, there were just so many great parts, but you detail how, and it's very cinematic too, because you open actually in the prologue, or I'm sorry, in that first chapter, it's 2007, which is well into your time at Lehman.
Yeah, it's an old technique. You start in the middle, then you go back to the beginning.
Was that your idea or the editor's?
It was not my idea.
Okay.
I didn't know what I was doing.
Yeah.
I'd never written a book before.
Yeah.
But
it sets up really nicely, because you're dealing with OCD in that chapter. You leave your apartment and you keep thinking about what you've left on, and you go back, keep going back. So you're dealing with that. So the reader is already sees that you're dealing with something. And the book is is kind of this discovery that ultimately you're bipolar.
Yeah, you find that out later on in the book.
Much later.
Yeah.
And it builds gradually. You're right. Like it's kind of a culmination. You're dealing an investment bank, and it starts again with that opening where you're dealing. Tell me about what the IWM trade was.
It's been 11 years. I could probably name it. It's out of business, but I probably shouldn't.
You changed all the names of the hedge funds, right?
I think I called it Spartacus.
Yes,
was it called
Spartacus.
And this was a hedge fund. It was a $20 billion hedge fund, and its whole business model was screwing sell-side traders.
Okay.
So what they would do is they would create a liquidity air pocket. So they would buy, let's say, XLE, the energy ETF,
right?
And they had like 3 or 4 traders, and they would all call different banks at the same time and buy it at the same time. And of course, all the ETF traders go to hedge,
right?
And it goes up like 2% on a frozen rope, and nobody gets any of their hedges off,
right?
And they, that was their whole business model. They didn't actually do any investing.
Just wanted to screw up the trade.
And they were successful for a long time. And the head trader there, I found out later, was making $50 million a year. So
it was just like kind of an arbitrage play? Is that?
It was like a pseudo arbitrage. Yeah.
Okay. You have this kind of white whale you talk about, Jay Knight, where you're like, you wanted to be Jay Knight, someone who went on to make a boatload of money and was able to do all the trading, but be set up by, I don't know if it was Lehman, but basically set up to do whatever he wanted. Yeah,
so Jay Knight started out as a rate sales guy on the Treasury desk. And what does
that mean?
Interest rates.
Okay.
And so Treasury bonds.
Right.
And he was out of Harvard. He graduated from Harvard, and he was basically an apprentice to an older sales trader. And when that sales trader retired, he asked if he could be trading bonds. Mm-hmm. So they put him on trading the 2-year note. So he was trading the 2-year note. Now, 2-year notes don't move around a lot.
Okay. Right.
And a 2-year note trader doesn't typically make much money, like maybe $3 or $4 million a year. Not personally, I mean for the firm. Like that's how much they make for the firm. It's not that much money. They mostly do it as a service to their clients. It's really like a loss leader. And at the end of the year, he had made $20 million.
Wow.
And basically, he hid all the P&L. He reserved it. And on the last day of the year, he flashed it. And he was up $20 million. So his manager said, gosh, what the hell are you doing?
Right.
And he's like, well, I've been doing some prop trades here and there. And, look, I made $20 million. And they're like, well, we want you to stop doing that. And he says, okay, I quit.
That's it.
And they're like, all right, let's talk about this for a second. So then they made him a prop trader, but he was only like 24 years old.
Right.
And they put somebody in charge of like supervising him, but he kept making more and more money. He made like $40 million a year, $60 million a year.
Wow.
And then he says, I want to move to Miami. I want to trade from Miami.
Right.
And they said, you can't move to Miami. And he says, okay, I'm out of here. And he starts walking out the door, and they chase him down. And so he moves to Miami, and he's making $80 million a year. So anyway, by the time Lehman goes bankrupt, he personally is making $85 million a year. He was making 15% of his profits. He was making $500 million a year for the firm.
Yeah.
And it was just one guy in his flip-flops in Miami. He's still on Wall Street. He trades in a hedge fund now. He was actually he took about 10 years off.
Yeah.
But he's back trading again.
And that's his real name, Jay Knight?
No, it's not.
Okay.
Yeah.
All right. We don't know who Jay Knight is, but you
But I wanted to be that guy.
You wanted to be Jay Knight.
I wanted to be Jay Knight.
Right.
So later on, when I was running the ETF desk, I started a prop book.
Right.
And my last year there, I was on track to make $30 million a year.
Right.
And at the end of that year, this is the year that Lehman went bankrupt. My plan was to go to management and say, I just want to trade prop.
Right.
That was my plan.
Yeah.
So.
And you were well on your way. You're on your best year. But meanwhile, Lehman is collapsing around you.
Yeah. Yeah.
What I like too is you're subtle because you keep alluding to the real estate group. Lehman's a huge investment bank, but you keep alluding to these guys on the real estate side because they were making all the money. And we know that's obviously what cratered Lehman.
I mean, they had VPs in real estate making like $4 million a year. It was insane. The firm would have failed anyway, but the real estate group was probably largely responsible for it. Lehman, at the bankruptcy, owned $40 billion of physical real estate. Desert in California, condos in Scotland. They never visited any of these properties. They just buy it. And they just ran the numbers in a spreadsheet.
Right.
Just to put that in perspective, the bank that had the second most amount of real estate was Morgan Stanley, and they had $2 billion.
Wow.
So Lehman had just bought all this physical real estate. And the problem is that when Lehman went bankrupt, you know, you start looking for stuff to sell to raise money, and a lot of this real estate just, you know, if you're wondering why the bankruptcy took 12 or 13 years, it just takes a long time to liquidate these assets.
Right.
It's probably the main reason why the firm wasn't rescued, just because it was so caught up in this illiquid stuff.
Yeah. Yeah, it was kind of a slow erosion, but you guys keep talking about it, so you knew something was going on, and you were kind of scratching your head like, what are these guys doing up there? They're just buying things on spec.
Yeah.
It's crazy.
Yeah.
What I found interesting is you started you ended up as an ETF trader. You were doing some prop trades, but you talk about how you were wondering about the risk with the prop trades, because a lot of times you're making these trades and you're not hedging them. They're a prop trade, and I think you wondered a few times in the book, like, can this happen in other banks? Or it was a question about kind of the risk that you were taking, but also that was just kind of prevalent, right, at investment banks at the time?
I was totally comfortable with the risk. I was actually pretty conservative and pretty cautious. So I was very careful with the risk. But the interesting part was, you know, I didn't ask anybody's permission to do this.
Right.
I mean, very much like Jay Knight, I just opened an account and I started prop trading in it, and nobody, I mean, as long as I was making money, nobody told me to stop. Nobody asked any questions.
You never had to ask permission.
No.
Yeah, but you also had a great batting average too.
Yeah.
Yeah. You call yourself a piker. Explain what that is.
A piker is a cautious gambler. If you look up the definition in the dictionary, that's what it is. It's a cautious gambler. It's somebody who goes up to like a $5 craps table and puts down like $5 on the pass line and $5 on odds, and just stands there and makes an insignificant amount of money.
Right.
So one of the reasons I was a piker is because I came from the military. I came from the Coast Guard, and that's a very risk-averse environment.
Right.
Especially the sea services. Coast Guard and Navy are very risk-averse. So really, like at least in the Coast Guard, there was no tolerance for failure. So you had to be very, very careful.
Yeah.
And when I first started at Lehman, that was my attitude towards risk taking, and I was doing index arbitrage, and I was not taking a lot of risk at all.
Right.
So I really had to expand my risk tolerance.
Yeah.
In the book, I actually talked about it's like shoving a peanut butter jar up your ass.
I do remember.
You remember that?
Yeah, it was a little graphic. Yeah.
Yeah. So, but it took time for me to expand my risk tolerance. And the funny thing is now is that I take larger risks in my personal account than I did in my prop account at Lehman today. I actually I do bigger trades today in my personal account. Okay.
Well, I've read those numbers and I was like, I got anxious. So during this time, and again, it is a slow kind of unwind because, as you said, later in the book, you realize you didn't know you had you had an illness. And by, I think, halfway through the book, you have an episode and you swallowed half a bottle of Tylenol pills to try to commit suicide.
Yeah, that was December of 2003. I was suffering from bipolar depression. Okay. And it was really, really severe. It lasted a couple of months. It probably started in October. If you get to the point when you're contemplating suicide, it's because the psychic pain that you're experiencing is so terrible that you're willing to do anything to make it stop. You know what I mean? I've known people that actually have committed suicide, and I was, and I actually tried myself. So, I don't pass any judgment at all on people who do that, because the pain just gets to be so bad. You're willing to do anything to make it stop.
And it wasn't probably the best environment because you are, again, taking all this risk. There was a big drinking culture. You were going out and binge drinking a lot of nights. Drinking, I think, what was your preferred?
Makers and Ginger.
Makers and Ginger.
Yeah.
I think at one time you were looking forward to going home and drinking your like a gallon of ginger ale and bourbon.
Yeah, yeah. It was funny that so I used to be a Jack and Coke guy.
Okay.
And I went out with one of my brokers, one of my EFP brokers, and I think it was at Houston's on Lexington, which I don't even know if it's still there. We used to go there and get ribs, but I was at the bar with him and I ordered a Jack and Coke, and this was like July, and he says, "It's like, what are you doing?" He's like, "That's a winter drink. Like Jack and Coke is a winter drink. You need a summer drink. You need Makers and ginger." That's when I started drinking.
That's when you started. Okay. So you were going out binge drinking, and then later in the book, so you kind of learned to live with it, at least temporarily. And then the book starts to progress, and I have to admit, it's one of the most anxious sections in the book where you have a breakdown. You get paranoid because you had a session at Lehman where they were talking about compliance, and you thought that you didn't do anything wrong, but you thought that what you screwed up a trade or there was something that you may have done wrong.
Compliance flagged one of my trades.
Okay.
And it was the tiniest of tiny trades. So as an ETF trader, you're trading millions of shares a day because you're program trading. You're trading baskets of stock.
Yeah.
And the trade that got flagged was a trade of some stock in the S&P 500 that I put down market on open on some day that happened 6 months ago.
Okay.
It was like the most innocent thing in the world, and basically the New York Stock Exchange flagged it and they wanted more information on it.
Okay.
So I got an email from compliance, and they said, "What is this? What is this trade?" And I explained to them it's just a market on open basket. And that's when I started to get paranoid. I said, "Well, what is the New York Stock Exchange going to do with this?" And they said, "Well, 49 times out of 50, nothing. Like we just give them the information and they go away." And I said, "Well, what about the 50th time?" And then it just it spiraled out of control from there. Yeah.
Yeah, and so it goes on for a number of pages where you start to spiral. You start to think the FBI is listening to you. They're watching you. I think you come home and you think there's a guy in a van or next to a van that he's watching you. And then finally, you just have a break on the floor and you walk into a psychiatrist's office.
Yeah.
And what happens?
The funny thing is, I actually walked by that office the other day. It brought back all kinds of memories.
Yeah.
It was really, really weird. There was a couch in the waiting area, and I literally collapsed on the couch, and I was just crying, and the poor receptionist was there, and she didn't know what to do, and the doctor came out, and she asked me what was wrong, and she spent about 5 or 10 minutes asking me questions, and she asked me things like, have you been happy recently? And I was like, oh yeah, like a couple of weeks ago, I was like, great, and and how often does this happen? And she said, I think you have bipolar disorder. And I was like, great. And I thought she would give me some drugs. And she said, no, you have to go to the hospital, like now. And she said, if you try to leave, I'll call the cops. My wife came, and she took me to the hospital. And I spent a night in the psych ER, which is one of the craziest experiences I've ever had. But I spent 3 weeks there. So.
And what hospital?
It was New York Presbyterian.
Okay. You spent 3 weeks there.
Yeah.
And the book, it's kind of almost serendipitous because it's there. You kind of have this moment about, tell me where you have this session or someone invites you into a writing session where someone, they were like a creative writing session.
Yeah. So they did a number of things for the patients there. They had like pet therapy. They would bring in dogs, and they had all this shit. And they had, this woman come in to do like a writing therapy, I guess. And I was in my room, and one of the nurses came by and said, you should really go to this. And I'm like, I don't want to go. And she says, no, you should really go to this. So the woman was Siri Hustvedt, who's a very famous author. Mm-hmm. So I was in there with like 10 or 12 other people, and she had us do a writing exercise. I gave it to her, and she said, you should be a writer.
Yeah, that was the moment.
Yeah.
And then the book starts to get better, which is ironic because as Lehman's crumbling, you seem to become more at peace because you realize what you want to do.
Yeah.
And you had started a little bit before that writing these notes. And I said at the beginning, you have a successful newsletter. This was kind of, I guess, the origin story of the newsletter. You used to put out like Bloomberg Notes. Is that how it?
Yeah. I started that in 2004.
Yeah.
And, I started with one subscriber.
Yeah.
And by the time I left Lehman, I was up to several thousand. You know, people, they would get passed around and people would ask to subscribe and stuff. And I didn't do them necessarily every day. I did them almost every day.
Yeah.
But they were super, super popular. Like, they just went viral. Yeah. And that's where I got the idea to start my newsletter, the Daily Dirtnap, was because of the success of that.
Right. So, and I love the way the book, as you're detailing, it's very visual. You can see kind of everything. You're coming into work, the stock is cratering, and you seem to be more at peace with all this going around. And I just see like this craziness going around, and you're just kind of, you're calm. You know what you want to do. The most ironic thing is Lehman goes bankrupt, but there was one piece of it that didn't, which was the broker-dealer part.
So Lehman was a holding company, so they had a bunch of different entities. So the whole thing went bankrupt. Right. The broker-dealer entity, which was sales and trading in the investment bank, basically the Lehman estate was trying to sell that fast, like very fast, before all the employees left, and it was worth nothing. Right. So they sold it to Barclays 5 days after the bankruptcy. Okay. Barclays, I think, paid $2 billion for it. Okay. For the broker dealer. Now the interesting thing about that is, like, I was actually sad that happened. Yeah. I did not want Lehman to get rescued. Yeah. Because that would make it harder for me to walk away. And it did make it harder for me to walk away because people were offering me money. They said, you should stay on. You'll get paid a lot of money. And I decided to leave anyway. So. Right. You went in and quit, just, right? Yeah. Yeah. So what was that feeling like when you... It was awesome. It was awesome. Yeah. I love Lehman. It was an amazing place to work. Just, terrific people, terrific culture. It's really hard to describe how amazing it was. But the job that I was in, the ETF trading job, was hands down the most stressful job on Wall Street, hands down. Yeah. My contemporaries that were ETF traders back then, none of them usually lasted more than 3 years in that job. I lasted 4 years. Yeah. So what happened is that when I walked out the door for the last time, I just felt like all this stress just go away because it was just an incredibly stressful job. You mentioned it was like family, right? Because one thing I thought, it was like the way that the people were supportive. Again, you would think most places, what happened to you after you got out of the hospital, you went back to work, people were very supportive. It was kind of like a family. Like maybe you didn't talk about it, but everyone there was really supportive. Oh, yeah. Yeah, absolutely. The other interesting thing is that the management, there was only a handful of people that knew what happened to me. I mean, I was gone for 3 weeks. Most people just thought I was on vacation. Right. And they worked very hard to keep that a secret. Because keep in mind, this is 2006, and the stigma of mental illness is a lot less today than it was back then. Yeah. So they really did not want to let it get out what happened to me. Yeah. So. You think it has gotten better in terms of... It's gotten much better. On Wall Street, you think? Oh, for sure. Yeah. Yeah, 100%. Okay, so I want to get into how Street Freak got made. So it was published, like you said, in a year, which is kind of a short time for books, because usually they can take, a year or so to get written and another year or so to get published. So tell me how, did you reach out to literary agents? Did someone come to you? How did the book kind of, how did it happen? So how this all started was, I said I was writing those Bloomberg messages, which were very popular. And there was a young guy in his early 20s who I was sending these to, and he was forwarding them to a literary agent, which he used to play basketball with. Okay. And he said, this is pretty good writing. You might be interested in this. So he forwarded those messages for a period of time. And then when Lehman went bankrupt, the literary agent, who was also a young guy, got the idea for me to write a book about Lehman. Now, he didn't know any of the other story, the mental health piece or any of that. Oh, okay. This was just going to be a book about Lehman. He didn't know what he was getting. No. Yeah. So I actually, and it was a writer's house. Okay. So I still have this agent. His name is Stephen Barr. Okay. And he was 23 at the time. Oh, wow. Okay. And so he was working with a more senior agent named Dan Conaway. And I sat down with them at Writer's House, and they said, look, you should write this book. And this was like December of 2008. Okay. And I was like, too much drama. Yeah. I don't, it's too fresh. It's too fresh. Yeah. I'm done with that part of my life. Yeah. I don't want to do it. And I didn't say no, but I just said, all right, I'll think about it. Yeah. And I just walked away. About 6 months later, I got another email from them. You should really write this book.
Yeah.
But by this point, I was a little more open to it.
Okay.
So I said, well, what do I have to do? They're like, well, usually what we do is we write a book proposal for a nonfiction book.
Right.
But just write us something. Just write us like a letter. Like tell us about what Lehman was about. So at this point in my life, I was doing the Daily Dirtnap.
Yep.
And I had an office on 3rd Avenue, which had no windows. It was this tiny office.
Okay.
And I had a lot of time. And I wrote them a 50-page letter. And
so was this just like a cathartic? It just kind of all flowed out?
Yeah.
Wow, okay.
And it's to this date, it was one of the most amazing things that I've ever written. Yeah. So I sent it to them, and I get back, the letter is an uncaged tiger. So what they did was they basically sliced and diced it, and they turned it into a proposal.
Okay.
And we shot the proposal. There were 4 publishers that were interested. Mm-hmm. So we had an auction.
Oh, wow. So you had an auction.
Had an auction.
Your first book, and you got an auction. Nice.
Yeah.
Okay.
So the winning bid was $155,000. Okay. Which was a pretty big advance. Yeah. I think advances have come down since then. I think they're smaller now. Yeah. So
that size was pretty rare, I think.
Yeah. So it was a pretty big advance. The winning publisher was Touchstone, which was run by a woman named Stacy Creamer. And I got on the phone with her, and it wasn't really like a good conversation. Okay. Because she's like, I'm really interested in this book because my brother is bipolar, and I'm really interested in bipolar. And I'm like, lady, this is a Wall Street book. Right. So I said to my agents, I was like, can we go with the second bid? Yeah. They're like, she won the auction. Like, you kind of have to, because the second bid was only $5,000 lower. Right. So I actually wanted to go. I don't remember who the other publisher was. So,
which is interesting because sometimes, the biggest bid doesn't mean you're going to end up with the publisher who could get the best book out of you. Right?
Yeah. I signed the deal and I write the manuscript. And this is around September of 2009. I turn in the manuscript, and like 3 months goes by and nothing happens. We don't even hear from them. Wow.
Who was your editor?
Well, it was Stacy Creamer. Okay, the publisher was going to be the editor.
Got it.
Yeah.
Oh, okay.
So I said to my agents, I'm like, is this normal? Like, we haven't heard from them in like 3 months. Yeah. And they said, no, it's not normal. Right. And then like the next week, we found out she assigned it to the most junior editor at the imprint, who was a woman named Lauren Spiegel. Okay. She was terrific. Yeah. She was 24. Right. I mean, it might have been her first book, as far as I know. Like, I don't know.
24 is pretty young.
There were kind of disagreements the whole way. Yeah. When I handed in the manuscript, they came back and they said, "Okay, we want to start the book in the mental hospital." Yeah. And I'm like, what? Like, this is. You're making pornography here. Right. Like, this is it's a sensationalist. Like, I don't want to do this. Right. So there were kind of arguments about everything, and the relationship wasn't good. And and my part in this was I was 34, 35 years old. Right. I was still pretty I was like an intense guy coming from Lehman. Yeah. Probably not the easiest person to work with, so I probably made it worse. Yeah. But anyway, so then there was this whole argument about like when it was going to be published, and like I said, they kind of crashed it and they did it in a year, and my agents disagreed with that, and it was a very messy process. Yeah. It was a very messy process. The other thing was they put really, and this isn't uncommon, but they put no marketing resources into the book. Yeah. I had a publicist at Touchstone, who, she did her job. She sent out ARCs to everybody. Sure. But when I asked them what the advertising budget was, they said it was $500, which got us,
which is nothing, right?
Which got us banner ads on a blog for a week.
Do you remember the blog?
Yes, it was the Aleph blog. So actually, there's another whole story behind that. Okay. So anyway, we're running banner ads on this blog. Right. FT Alphaville slammed my book, which I don't even think you knew. I'll tell you.
I don't remember.
I'll tell you about that later. Okay. I'll tell you about that offline. Okay. So they slammed my book, and the guy whose blog we were running ads on went in the comments section, was like, "Yeah, his book sucks." I mean, it was a disaster. The whole thing was a disaster. So.
Well, like a fine wine, it has aged very well. And like you said, do people still reach out? It's still selling.
Yeah.
Right? So it's again, there are a lot of movies, a lot of books that get made.
It did get optioned for TV.
It did. Okay.
Yeah. With something called Stick Figure Productions, and they optioned it. So I got some money for that, but it ended up not going anywhere. There was this big land grab for finance titles in the movie and TV industry. Tony Duff's book, The Buy Side, was part of that. Like his got optioned, but eventually what happened is Billions was the first.
Oh, okay.
There was not room for 2 TV shows on finance, so everything else went away.
Well,
so.
yeah. Do you read a lot of finance books?
I don't.
You don't?
I stopped.
Okay.
Yeah.
They're not good writing, right?
No, I mean, really what it is I'm going to say the most like douchiest thing in the world.
Okay.
I just know everything. Like I can't be taught anything new.
Right. Well, we didn't even talk. All the Evil of This World is a fiction book.
Yeah, it's a novel. Yeah.
How did you get that made?
So I had the idea for this book even before I was writing Street Freak.
Okay.
I had always wanted to write this book. I had the idea for this novel. And my agent was like totally open to it, Stephen Barr.
Okay.
He's like, great, go work on this. It's going to be awesome. And I was sending him chapters as I finished them.
Yeah.
And he was kind of getting like less and less interested. First of all, it's very niche. It's about finance, but it's also very dark and pornographic. Like it's the filthiest book you'll ever read.
Okay.
So I'm sure he's kind of looking at this and saying, I can't sell this to anybody.
Right.
He actually did push it out to a couple of indie publishers, and then they got rejected.
Okay.
So I said, well, why don't we self-publish it?
Okay.
So he said, actually, Writers House, they don't anymore, but at the time they had a digital rights division, and it wasn't exactly self-publishing, but it was like a hybrid, self and traditional, that they did in-house. So that's how I published that.
Okay.
Was through Writers House. So if you go look on Amazon at the publisher, it says West 26th Street Press. That was their imprint.
Okay.
So
give us a little summary about what it's about.
So it takes place in March of 2000.
Okay.
There's an options trade that takes place around the 3Com spinoff of Palm. Okay. And this is a trade that touches 7 different people. So you have a clerk on the floor of the exchange. You have a market maker on the floor of the exchange. You have a $2 broker on the exchange.
Got it.
You have a trader at a bank. You have a sales trader at a bank. Then you have a trader at a hedge fund and the PM at the hedge fund. Okay. So they're all connected by this trade, and it's really like 7 short stories, and it's just a couple hours out of that day involving all of these people, and they all collide together. Okay. So the engineering of the book is very complex. When I decided to do this is the highest degree of difficulty I could have picked for my first novel. It was incredibly complex. Wow. But I'm way more proud of this than I am a Street Freak.
Really?
Yeah.
Okay. Well, I'm looking forward to reading this. So it sounds like the Crash of finance. You ever seen the movie Crash?
Oh, it's a little bit like Crash. Yeah. It's a little bit like Magnolia.
Yeah. Okay. All right. So I want to give a couple plugs. Hopefully by the time this comes out, you're coming back to New York in September. You got a DJ gig, right?
Yeah.
Tell me about that.
So I'm playing at Do Supper Club, which is on 21st Street. I've played there a bunch of times before. Okay. Sometimes we do fundraisers. This time we're not. We have to pay the bills at the club, make sure they stay open. It starts at 7, ends at 12. I'm playing from 10 to 12, hoping to get a good crowd. Yep. So if you're in the area,
excellent.
come out.
Okay. And again, Daily Dirtnap, you got to subscribe. It's one of the most informative financial newsletters out there. Although, what's going on with Intel?
You don't get my newsletter, do you?
Yeah, I'm a subscriber.
Oh, that's right. I totally forgot. That's right. Of course you picked the one stock that's like caving my head in. Right?
All right, I don't want to give anything away. Just subscribe to the newsletter. It's mostly great advice. How do people find it? How do people subscribe to it?
Just go to dailydirtnap.com. There's a little nav bar on the left. There's a button that says subscribe. Click subscribe. Email pops up. Yeah. Just send me an email. And actually, if you say you listen to the podcast, then I can give you a discount.
Okay. Yeah. I'm a piker, but it has great advice. I would have made a lot more money if I listened to some of this stuff and put some of these trades on. So, Jared, thank you so much. I really appreciate you being my first guest on Read the Bull. Thank you.
All
right.